Okay, so today is November 24th, 2021. I This is a day trading recap from my E-mini or micro E-mini trade and my NQ trade today. Today was a very, very, very interesting day, and I think more so because I just learned a few things about myself and some things that I did that happened that kind of, should I just say, my start today really affected how I traded today. I made a really good profit today, really, really good profit. Um, in terms of R multiples, I made over 2R, which is great. Um, Actually, no, I made a lot more than 2R, but in terms of target, I have a target, I guess, that I try to aim for. Um, and I made quite a good multiple of that. But it could have been a lot better if I had managed this trade better. Also, because I had an idea of what we were going to do today. And I like to use the word I had an idea as opposed to saying I knew what was going to happen. All right. So, um, first of all, I'm enjoying trading the E-mini, following the trend, but I went in today with the mindset of trading a trading range like we did yesterday. Today, as you can see, we had a bull trend, but I had a really good feeling we were going to go into a bull trend, and I'll kind of go into the reasons why now. I've changed my screen, so it's a bit weird now to kind of show because it's now vertical. All right, I know what I'll do. I'll just talk up through it by time frames. So let's go to. We'll focus on the E-mini first of all, and then go through the clean chart and go on to the 4-hour time frame. All right. So coming in, we talked yesterday. Same thing, spike and channel. Right, spike, pullback, channel. We have 1, 2, 3 there, but we're talking about pushes up, right? But anyway, we know that we're in this channel. We came to the bottom of the channel yesterday, had a micro double bottom, and then today we ended up having a bottom. But the point is, we know that there are buyers on this channel. I mean, here is proving it, here is proving it, and of course, yesterday there's proof. So we have 3 points to prove this trend line. And then we have one, just drawing an extension or a parallel extension, we have a point here to prove that there's sellers on the top here. So if anything, we know we have a very good idea of price going up. I went in today without sort of a good mindset of what I wanted to see. Anyway, so we have this moving average going through price. So it's in a range, finding support here, support, 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 and then bear breakout through the moving average. That's another thing. Whenever you have massive bear breakouts or bull breakouts, they're usually through moving averages like that. Although this looks like a bounce more than anything. And it really just says something about the fact that traders are trying to change the direction of the trend. Obviously, if it bounced here, we would carry on and we would test up. So that's another way to kind of, trade that. But that's something else. So go on to the 1 hour chart, because this is I'm finding a lot of use for the 4 hour. It was used to be just 1 hour, but even the 4 hour is becoming very useful as well. On the 1 hour chart, we can see, if we just kind of pan into this area, we had 1, 2, and 3 pushes down. I mean, you could call this a pullback, but I think this is more of a range. This is the bottom of the range, and this is the final push, right? Or you can say this is a spike and channel, even though there is a breakout here, but I look at it as 1, 2, 3. As in the wedges, this is the wedge or the channel, if you want to call it. So the channel started here and it went down here, and this is the base of the channel, and probably even started there. So this is the wedge, if you want to call it. 1, 2, 3. All right. Anyway, or 1, 2, 3, however you want to call it. So we know we're going from one range to the next. Whether this will come this high is another question altogether. But the point is, we have support here because we're in a bull trend. And this is the thing. I know this, right? We were in a trading range yesterday. We pushed up, pulled back, and went back up, okay? And we talked about this. price going through, the moving average going through price is just really a sign of that. Okay, so we'll go on to the 15-minute. So in the 15-minute, we use this to analyze pre-market. As you can see again, using yesterday's price action, came down here, went up again, had three pushes, 1, 2, 3, or one, where is it called? 1, 2, 3. This is the top of the range, as you can see here. And then we went down, right? So this is another range here. We broke out here, 1, 2, 3, or you can say 1, 2, 3. And this is where things go a bit tricky. So if we go on to the 5-minute, and this is where things were a bit weird for me. So today I decided, okay, since we were in a channel, and I'm going to go back to the default. This is what I charted, and I said, okay, fine, we're in a channel here where we are most likely going up. So I took a trade long at the close of this bar, I believe. I can't remember. I'm going to pull NinjaTrader because it will show me everything. So let me pause this and pull up NinjaTrader. Okay, so now let's pull up the Globex chart. Okay, so this is Globex chart, right? Okay, so we got in here somewhere. Okay, so we're gonna pull up the chart data. Oops, the daisy. So let's pull up chart data and markers only. All right, so I took a trade here. Yeah, there we go. I went long here on this bar, and I think I had like 2 contracts. My stop was, I based my stop on here or here. One of these, I based my stop here anyway. So I went long there. And see, the thing is, every time I go long before the open, and the open is here, let's actually put a cross here so we can see things clearly. So I went long here, as you can see, and the reason why I went long was because I just saw this and I thought, okay, if you look at this channel, right, this is the channel that we're going down on the Globex, right? And this is the channel, this is the top of the channel, this is the bottom of the channel, this is the beginning of the channel from the range, this is the bear breakout. You know, we have a wedge top here, more down, and we have 3 pushes. So I thought, okay, well, we have another bear breakout, right? Okay, let's see how this goes. So I went long here, put my stop way down. We went up and we went down. We went up, went down. I thought, we're not finding buyers here. This isn't looking good. And then I got out here for a few points, and I made half my bought. Yeah, so I bought these 2 levels, and then I got out over here because I made half of what I normally aim for. So say for instance I'm aiming for $100, I got 50, right? That's essentially what happened here. And let's say I bought here and here, so I've had enough contracts to give me $50 from how many points average here, so 1 to 2 points. Anyway, then the market opened. Then this was once, and this is the thing, I wasn't trading any price action, I just went long because I believe there were buyers here, and I saw this bar it was once a huge green bar, bought out of FOMO. I say out of FOMO because I didn't wait for the bar to close, I didn't have a signal to go long, I just bought anyway. And it's interesting, I exited where I should be going long. And then we just came down, I bought, and at this point I was now thinking, okay, what is going on? Bear bar, bear bar, bear bar, bear bar. We have indecision, but 4 bear bars. I was not very happy with this. And I really wanted this to be a green bar. It came down, came back up, came down. I was like, okay, I still got my stop down there, but I don't like where we're going. This is supposed to be the buy region, and I think I kind of lost my focus. Right? Although we have wicks, and this is usually a good sign that we're not going, it's not like this pullback and this, pull 4 bars. So I think I pulled up a 2-minute chart, and I saw we had a few overlapping bars as well, and I wasn't very happy with what was going on. So because my risk was already high, I think I overbought. I bought too many contracts. I reduced my risk and got out. Then I said to myself, okay, I screwed this up. Went long again over here. Got out one. Got out another one. Went long again. Um, and what happened now? Yeah, I went long here. Got out here. Went long again. FOMO. Got out. Then I realized I was like, this is a wedge. 1, 2, 3. I need to get out. So I put an order just above this bar because I was like, okay, this is a spike. We're probably going to go a bit higher. We're going to have to test the high because I'm disappointed with the fact that we're not going any higher. So I got out. And then I took a short, exited, and that was it, right? At this point, I was almost at my daily target, and I think let's just say I had a very little amount that I had to make. And I should have just gotten out here. Instead, I waited for this to come back up and I got out. Or no, actually, I didn't wait for it to go up. I just got out here when this. And at this point, I was just not following any plan, and I was not on form. I wasn't doing things right. Then I saw this wedge 1, 2, 3, shorted here, shorted here, shorted. No, shorted. And I didn't like what was happening here. So I exited. No, I added more. Shorted. And then I noticed that we weren't going down. We're finding support on the moving average. And I remember saying to myself at that time, Jid, we're in a bull trend. We are in a bull trend. We're probably going to find support on moving average. We are in a bull trend. I drew this to try and convince myself. At this point, I exited for a big loss. Not a huge loss. Just took a huge chunk of what I had made from all this. Then I went to the NQ, not even the MNQ, the NQ. And I took a trade with 4 contracts, and that was a gamble. And I say it was a gamble because the risk was very high. Let's go to the NQ, and let's show. And I say this, it's embarrassing, and I don't like it, but I did, and I didn't need to do it because after I did it, it threw me off. So I took a trade on the NQ and I scalped long here. What's even so funny is this bar went all the way up here, and I didn't want to take my profits because I was panicking. I saw I had made so much with that, and I just panicked. And I realized the reason why I panicked was only just because I had no stop. I had taken a huge trade with too many contracts, and I just exited quickly. I just hit close. I didn't even put I just hit the market. So half of whatever I made, let's just say I was up $1,000, and I just took out about $500. Then I started trading stupidly over here. I shorted here, got out. Then I shorted here. What happened here? I shorted here. It says I got in here and I got out here. Something doesn't make sense. I can't find my exit. Doesn't matter. Then I went long here because this is saying I entered here, got out here, entered here again, and then I got out here, entered here. I'm not sure what happened here. It's a bit confusing, but I was just messing this up. Anyway, I entered here, got out at the top here. Entered, and then got out way at the top and just said, you know what? Don't do this. You're not trading right. Forget it, because I'd already lost so much money on this. Then I went to the MNQ and made a long entry here, and then got out here. I wasn't reading the price action. At this point, I now saw that we had a wedge bottom here, and I thought, okay, this is going up. But this is where I stopped altogether, because I realized I'm not reading the bars, I'm panicking, and I'm not doing things right. The same thing was happening over here. I was trying to decide, okay, well, at the top of the range, do I short? Do I go long? So I'll buy, then exit for break even. I shorted, went back, down, then I got out, and I thought, this is just not working out. I saw this, and I thought, okay, 1, 2, 3 pushes down, this is probably a wedge, and it was, and it's actually a triangle, because you can see we're making lower highs, but we're trying to keep the base, and this is a triangle, break out of the triangle, 3 pushes up, 1, 2, 3, and 1, 2, 3, FOMC. This is definitely the range. We're still in an uptrend, and we're going up. So today, like I said, very interesting. Bad sort of management of the trade. This was okay from this part, as far as management of stops and things like that. Over here, where I think I got tired and was just not really sure how to trade this. I remember even over here, I was saying, when, even if we have a wedge, we should start edging down, but we have a bull breakout of this. We're not going down. Even this is a double top. It looks like a wedge top, but doesn't look like there is follow through, good follow through by the bears. This is disappointing. I should get out. And that was what I learned. I learned that if you're not going to see what you're going to see, so like if you have a wedge top and you don't see bear bars, consecutive bear bars like that, instead you're seeing bull bar, bear bar, bull bar, the follow through isn't great. Just get out, find an exit. It's not working. It might work later, but not for you. There's a reason why it's not working, because the bears aren't convinced of what's going on. They believe it's going higher, so they're not going to push it any lower. So how should I trade this day? Well, first of all, I should have just relied on my stop. And if I believed it was a bull trend, I can't trade it like a trading range. And what I mean by that is, so on the previous day, I traded this like a trading range, i.e., I'm scalping throughout. So if I get a wedge top like this and I short here, I know I'm going for 2 legs at least, right? 1, 2, you can even get 3 legs here. Then I know I'm going up, I know I'm going down, and I'm just scalping the legs, right? That's what you do on a trading range day. On a day that you believe you're on a bull trend, right? You should, because you believe this is going to be a bull trend and you have this bull breakout. Now, why is this important? And I'm going to shut down NinjaTrader now. Right, how do you know you're going to be in a bull trend? What is telling you you're going to be in a bull trend? I don't know, but I do know one thing. We had a double bottom. We're back at the bottom of this range. Chances are we're heading up, right? Especially having had a bear break down here, right? So we had a massive bear break all the way down here to the bottom of the range from this massive wedge all the way down, double bottom, right? We're most likely going to break the range itself, because that's generally what happens. We have a wedge bottom, 1, 2, 3 on the higher time frame, double bottom, we're heading up. So therefore, we should take a bet that we're in a bull trend. This is also a really good sign that we are going in a bull trend. So what you should do is you scale in for a bull trend, and that's what I should do when I'm trading a bull trend. Especially, this is the sign when you break the moving average like this and you come back, retest it, and you're now buying off the moving average, using it as support every time. Even here, see this bear breakout is going to fail. You just have to bet it's going to fail. Then you get up here. This is probably where you need to get out. You're seeing consecutive bear bars. You could probably get out here, but look, we found support on the higher time frame, 2060, and then we carried on. So this bull breakout, the moment we see a bull breakout like this, possibly this, but this one in particular, breaking the moving average again, we get in. We can put our stop over here and we carry on riding the trend. That's what I should have done today. I mean, this breakout of this channel is also a sign of that. But even buying here, putting your stop down here somewhere is also not bad, because that's the whole point. If it breaks and hits your stop, then the trend, you're not in a bull trend anymore. You're probably in a trading range, or you're in a bear trend. And this is why you put your stop round about here. You get in as low as you can. And if this is where your stop is, you measure your risk and you start to play the trend. Each point as you're going into the trend, you start to look for where you can move your stop to. Now, this bull breakout means you can put your stop over here. The pullback, it should not come back here. Pullback is where you can buy some more and keep going. It's another bull breakout, so you can put your stop down here. Or some people could argue, say you can put your stop down here. I'm more comfortable putting my stop over here because it shouldn't come back down here. And then you can carry on. This is a bull breakout. It is a bull breakout. And you could put your stop down here and then just carry on. But I think at this point, if you are seeing that you've broken the moving average again and you have a bear breakout, you probably want to get out at this point. Yeah, and then it kind of makes sense now, because you've done 3 pushes up. You're not finding any support here. It's the FOMC as well, so you're probably going to come down. But you've got 1, 2 and 3, or even 1 2 3. That's what I should have done. I should have just looked for pullbacks and bought pullbacks above bars like this, coming off the moving average. Another one to buy is off this pullback, and another one to buy is off this after this wedge, and then just kept on going. So that's how I should have traded this, and kept moving my stop. But I wasn't trading a bull trend. I was trading a trading range. I was trading like it was a trading range, and yeah, and that's one to learn. I find trading bull trends have been tricky for me. I've lost a lot of money on bull trends and bear trends. Like this day, I didn't trade this day. I traded only this section with paper money. This would have been challenging because then I'm thinking, oh, we're going for a trading range, but then the moment we broke it, we go for a measured move down. This is probably the easier part, this wedge, because then you can get this. But yeah, it's definitely good learning. Very, very good learning, knowing how the market can behave in these areas, but even just knowing how to even trade this, expecting this, because when this happened, whilst this is a huge range, I didn't expect us to reverse so sharply because there's such intense buying. But I guess it's all the way at the top of the range. We should get some intense selling as well. All right, so that was trading today. It was fun. I enjoyed it a lot. I guess because I made money, but yeah, I'm looking forward to. I don't know if I'll trade on Friday, but at least certainly next week, Monday or Tuesday will be a good one. So I'm looking forward to that. Happy Thanksgiving.